SMF, MMTs, SMF Street, All Points Bulletin. The 2025 call that we talked about a week ago, these contracts, I want you to know, number one, that this is the 2025 call. Nasdaq 100, it tells you. MMTs, look at that big pop up here. We got super inflated on this side of the market. Now, MMTs, be advised that this contract, when they were $1.13 and now they're up here at $34. You bought 10 contracts, you just made about 30 some odd $1,000, 33,000. That's trading that volatility, and this was at the end of on 8/31. They took all the premium out of them over here. At that time, when we had that correction, they went from the highs of $20.80 right down here to where SMF loves purchasing them, because that's volatility. Whether September was going to do anything or not is irrelevant. What it means is, for the price action, just in case there was going to be a rally, whether if or not, it didn't matter, because we'd already made enough money shorting the index prior to buy 50 of these and still be way up on the trade. We were buying this with capital that was made in August shorts on the index. That profit rolling over into here, and you buy 20, 30 of these contracts, their volatility, they're deflated. Now they're super on the highs. 34.42, they're super inflated. That's this call right here. So when this one comes down, this one will come up. They took $27 out of the 2025 contract. Let's finish up with the call. MMTs, there it is, 2025 call, super and bloated. We're not going to go too much higher. We can go a little bit higher, and we can stay up here for a little bit higher, but I've never seen one yet on an index or an equity that when the option at that strike price gets so inflated that it doesn't come down. And I can prove my point, just like over here. They brought that thing clear down to $1.13. That was still inflated. That's why the put side back in August was good, and we did those trades. We bought those trades. We bought the 2000 and the 1950 puts on our last trades. People want to go find out when we did the put side of the trade, go to stockmarketfunding.com, go to the Nasdaq 100 and look up put options. You'll find it. Once again, folks, we're inflated. That's the end of the call. That means that we've gone up a little bit too far, too fast on that side of the market. A big gap up. These contracts were awesome, man. $14.70 they made per contract. But if you were buying them down here at $2 or $1.50, you're really loving the breakout, September rally breakout that no one thought would ever come here. The trends do change. Let's get to the put side of the market. So here's the put side of the market versus that call side up there. Let's bring that chart up, MMTs. Now, what you want to know, MMTs, they took $63.21. They took 20, if you had 10 contracts here, you lost 27 grand. But guess what? We're going to look at where we buy this against that. When the Nasdaq 100 index shows a reversal, we'll start scaling in at these lower prices. I'm going to give all of these prices out to you now after the video is over. So basically, once again, a 225 call against a 225 put, Nasdaq 100, peer imbalances, mathematical market maker imbalances. Sorry, one side is only going to go down so far, and this is only going to go up so far, folks. It's only going to go up so far before it has to come down. They always do come down, and this side always goes up. You just want to be part of the SMF Street so that you can learn how to trade these. I can short that. I can go long here. There's lots of things I could do.